It's been quite a non-eventful day, rather to say. And there were no harsh decisions taken. There are a couple of things that should have been addressed. One was what's going to happen to the subsidies, okay, and two, a way to control money moving into the parallel market, and none of those actually fell into place. None the same, it was a pretty practical budget in the sense that they realized that the fiscal deficit targets that they set out to do are very much achievable this year, okay, plus minus 20 basis points. So, so I think there's a realization and there's a dawning that the system, there is, they've given themselves very low room for any execution errors in the current fiscal. While saying that, I think at a very investment level, I mean, things to probably look for, what the finance minister said at the end of in one of his television interviews post that, was the fact that he wanted to put more money in the hands of the consumer, which he would have probably done in the current budget. And the second more important step that has happened is on the infrastructure side. Okay, there's been a big shift in terms of policy of not wanting the infrastructure or incentivizing the cost structure of the investment economy by lowering the cost of various raw material inputs into the entire system, and actually not trying to expand that economy significantly by giving significantly more tax advantages or subsidies in that space. So he tried to make operational assets efficient and help it generate cash flows, and on the other extreme, trying to let the consumer take over the lead to grow this entire economy. I think those are two significant things to look for from the investment portfolio really, and that's how we're trying to, and that's how ultimately for 2012, the next probably 2-3 years, that will be the main theme that will run the market.